Shift our focus to soft commodities. Soft commodity prices had a mixed month in July, with cocoa rising strongly and rice and cotton making modest gains. Meanwhile, maize fell sharply across board. However, in Nigeria, official imports of rice have slumped dramatically in the first half of 2013 as government promises to ban importation fully by 2015. For a look at soft commodities in Middle Africa, I'm now joined by Edward George, Head of Soft Commodities Research at EcoBank. Thank you so much, Edward, for joining us. So a very interesting report you've put out there. You're looking at quite a number of commodities, and maybe we should start with that news around rice in Nigeria. We've seen the rice price down for the year. I think it picked up a little bit in July, like you noted in your report. But what's the outlook, given the rhetoric we're seeing from coming out of Nigeria, particularly in terms of how the agriculture sector is likely to change, at least from a policy viewpoint, plans to ban importation by 2015. Do you think this is something that is changing the dynamics for rice as a commodity?
Yes, I think basically in Nigeria they're facing a real crisis in the rice sector. There was an expectation that taxes would go up at the beginning of this year, and as a result a lot of traders greatly increased imports during the final quarter of last year. Taxes went up to a combined total of about 110% currently, and we've seen a total collapse in official imports of rice this year, probably around 10% of the level they were last year. And at the same time we've seen a huge surge in smuggling from neighboring Benin, where the total tax is only around 35%. So they're facing a real problem in Nigeria because the traders have been running down their stocks. They are balking at the idea of paying incredibly high prices to replace them, and the smugglers are filling the gap. And so I think it's very likely that going forward into the final quarter of the year, we might see some waivers granted by the government to traders, because of course rice is a very politically sensitive food crop. It's the main staple of the population, and we have an election next year.
Right, of course. Let's talk about the weather and the impact that has had for soft commodities coming out of West Africa. Cocoa, of course, is a big one coming out of Cote d'Ivoire, Ghana, Nigeria. Cote d'Ivoire, I think, was particularly hit by the weather. Can you just talk us through your expectations for what this could mean for such commodities going forward?
Well, we've seen already that there's been a spike in futures prices for cocoa because of the poor weather in Cote d'Ivoire. And we've seen this actually throughout the season. The current season, 2012-13, started poorly in Cote d'Ivoire. That drove up the increase in prices. Then as there was a surge in supplies, particularly at the start of the mid-crop in June, we saw prices slump. And really the concern is that because there's been very dry weather for the last month or so, this is going to delay the start of the new main crop, the 2013-14 crop in October. On top of that, we have the fact that the government's forward auctions are going very well. In fact, according to the Finance Ministry, nearly 2/3 of the future crop has already been sold. So there is the possibility that for a lot of traders who might have long positions, as they get into October, November, that time when a lot of the grinders like to stock up on beans ahead of Christmas, there won't be enough cocoa. So we've already seen prices increase quite a bit in the last couple of months, and my feeling is they have a lot further to go. Cocoa prices are still relatively cheap compared to 2009 to 11, and with the outlook for the weather still not looking very good for Cote d'Ivoire's main crop, I think we're going to see price strength going forward.
Right, so the dynamics positive for cocoa. What about sugar? Quite a bit going on, particularly in Kenya with respect to policy there. Talk to us about your thoughts about where sugar is going as a commodity. Is that something that we should be loading up on going forward in your view?
Well, I think certainly, particularly when we look at Kenya, I think there's a real crisis in the sugar sector there. They've been trying for many years to reform the sugar sector, and the problem is they have very high costs in Kenya. It's between $700 and $800 a ton to produce sugar there. That's more than double the cost in Zimbabwe, Malawi, Sudan, Zambia, which are the major competitors in the region. And so what we've seen in Kenya is a surge in cheap imports into Kenya from their neighbors, and also a lot of fraud as well. A lot of traders importing sugar duty-free from COMESA and then exporting it, claiming that it's from Zambia or Tanzania, duty-free to Kenya. They need to have major reform of the sector in Kenya, and the problem is that in March, the special safeguards that they have from COMESA are due to expire, and that's when there could be a flood of cheap imports coming in. And so I think it just goes to show that generally the sugar sector in East Africa and Southern Africa is facing a watershed moment. The most efficient and successful producers such as Zimbabwe, Sudan, Zambia, could really have a bright future. But for a country like Kenya, it's running out of time to reform its sector and get in some foreign investors to take over its failing mills.
I want to get your thoughts on sugar in Nigeria. We know that Dangote Sugar is looking to do some more backward integration in that respect. Do you think this is something that can work long term? I imagine that the sugar needs of Nigeria are very significant. I know we do a lot of imports from Brazil. Do you think that this is a move that could work here?
Absolutely, and I think that's another one of the government's success stories when it comes to backward integration. The government has a National Sugar Master Plan, the NSMP. They're aiming to make Nigeria self-sufficient in sugar production, and there is a huge amount of investment going on at the moment in sugarcane plantations. Just like with cement, the government has been gradually ratcheting up the barriers to imports. They first of all banned packaged refined sugar, they then effectively banned refined sugar, and they're now trying to reduce the amount of raw sugar coming in from Brazil, which is refined in place. And nowadays, if you want to get a raw sugar license, you also have to be developing plantations in Nigeria. We've seen heavy investment from Dangote, not just in Nigeria, beyond, of course, in sugar production, particularly in SCC. And I think basically it's a bright future. But also, there's still a way to go. Nigeria is the largest sugar importer in Africa. It's one of the largest consumers as well. So it's definitely on the right track. And of course, it's a very bright sector because Nigeria's population is growing strongly, so is the rate of urbanization, and we all know that urban populations consume a lot more sugar. So certainly if you're investing in sugar in Nigeria, you have a market sitting there for you.
All right, I don't know how good you are as a forecaster, but looking at sugar, coffee, cocoa, maize, which of these soft commodities would you be betting on going into next year?
Well, I'm not a betting man because I'm an analyst, not a trader. But what I could say definitely is the outlook is very positive for cocoa prices. As I mentioned before, it looks like that there is going to be a deficit going forward into the next year. There's a real recovery in international demand, not just from grinders, but also from chocolate consumption. And so I think we should expect to see cocoa prices strengthening. I think also cotton prices have probably bottomed out. There is an expectation that China will resume its stock buying for its strategic stocks, and that represents a huge amount of demand, which should really support prices going forward. But I think the outlook for sugar and also the outlook for coffee, particularly Arabica, is pretty bleak. We're seeing in Brazil a record crop this year in what is supposed to be an off year, and we're going to see next year probably even better crop for coffee, particularly Arabica. And at the same time, if we look at sugar as well, there is a global surplus, probably a third successive year. Even though it's going to be a bit smaller than last year's surplus, it's still a surplus. There are huge carryover stocks, so certainly the real question with sugar is how much further could it fall?